Okay, this is an MCQ series. It's my first MCQ. So let's dive into the question. This is the question. So whenever you are approaching to a question, any question, first you need to read the most important thing, which is in the bottom line. Yeah, obviously what they are asking. From the following situations, will the company report lower than, under which of the following situation will the company report the lower than the actual net income? So it seems to be some impact on the net income. So practically speaking, it may be the question related to any adjustments. So let's dive into the question right now. So the question starts with the company missed the recording purchase worth of $10,000 in current year income statement. So they missed a purchase item. So it's an income statement item. They are also asking what's happened in the net income. So practically we need to think everything inside the box of the net income, not outside. Okay, you can't go and say balance sheet item. Don't care. It's none of the concern to this question. Okay. So what's the next thing? They missed the entry. So it's a omission, complete omission. They seems to be omitted everything while finalizing the accounts. So here and the closing, I think so they are making the adjustments. The company accountant detect the error. Wow. But what he done is like he detected the error, but he corrected partially. Only the thing happened in this situation is partial correction. So the most important thing in a question, you need to read the question, what they are asking, the last line. So from the following, under which of the following, I mean like under which of the following situation, will the company report the lower than the actual net income? So we need to look into the everything, I mean the options. So these are the options. Where's the 1 second? This is the option, sorry, like jumbled. So in this question, like they gave the 4 options. If the accountant has reduced the cash. Wow, that's great. If the accountant has only added the missing purchase worth of 10,000, that's great, to the cost of goods sold. So if the accountant has only increased the accounts payable by $10,000, oh, okay. If the accountant has reduced the inventory by $10,000, okay, this is the 4 option. Before that, let me show the actual journal entry for the purchase. So this is the journal entry. It may be 2 scenarios, like it may be on cash or it may be done based on the credit. So either situation, the entry will be like we will debit the purchase. Obviously, we are getting the inventories. So the asset is increasing. So we all record the thing in the income statement. It's an income statement item. The another thing which we credit, we are paying. If we are paying, we will credit it. It will goes to the balance sheet item. So I don't need this. Based on my question, what will be the impact on the net income? Net income. Okay, we will dive into which of the following is lower than the actual. Okay, but right now I need to think only about the income statement item. So balance sheet item, I don't need it. Okay, next. The entry is like purchase account debit $10,000 and the income statement, same entry. But if it's done on the credit, you have an account payable. Obviously, it will have an impact on balance sheet item. Sorry for the spelling mistake. Okay, it will have an impact on the balance sheet, not on the income statement. So either situations, whatever the case may be, I have only the purchase. It will have the impact on my income statement. So okay, let's dive into the option. So the first question, I mean the first option. The accountant reduced the cash by 10,000. Wow, but he haven't made any adjustment to the purchase. I don't need it. What will be the impact? It won't have any impact on the, I don't want to rectify any errors in my income statement. It will make the adjustment in the balance sheet item. Okay, no problem. Next, the option B. If accountant has only added missing purchase, so there's something they made adjustment in the purchase to the cost of goods sold. So this might be the answer because they have done the adjustment in the income statement. Okay, no problem. We can keep it. It's right now aside. So let's go for the option C. If accountant has only increased the accounts payable, okay. So they increase the accounts payable, but it's also not relevant because it's a balance sheet item. We are speaking about the income statement item. So this option also already got it. So practically, we had like a 25% probability that each might be the answer. But right now I reduced it. Right now, the B might have the 50% chance. It might be the answer, or D, either or. Okay, you can use the coin. So don't use it. Let's dive into the analysis. So the last one is if the accountant has reduced the inventory by 10,000. Okay, but there is some catch in this. So I will explain both. Like there is a catch in the option B and D. Okay, let me reveal it. Okay, no problem. Right now it will become like complicated. So I will explain the option B and I will also explain about the D. Okay, let's dive into the thing. So I hope you understand why A and C is eliminated. So A and C is not the answer. So it might be B or D because A is the balance sheet item. C is also a balance sheet item. The question is about under which of the following situations, under which of the following situations will the company report lower than the actual net income? So net income, there might be some 1 lakh, sorry, $100,000. Maybe the actual, maybe the due to the adjustment we might got like $75,000 or $85,000, whatever the case may be. Okay, if it's less than the net income, then that's our option. Most important, that item will have impact on income statement, not on the balance sheet, because we are speaking the net income, which is part of the income statement. Obviously, you may say, bro, it will go for balance sheet. Yeah, obviously, it will go to the balance sheet. But what we are speaking is the situation, the scenario in which my net income, actual net income, and the rectified, I mean partially corrected item will have a difference. The to my actual has higher value, the one with the rectification will have the lower value. Okay, that's the thing about this. I hope you understand, but I'm taking kind of like more time, but don't think so. It's my first video. That's the reason. Let's go for the, like I explained the actual journal entry. But what they have done, they have either that's option A, they reduced the $10,000. So what I've done is they entered the entry, only this entry. They made an adjustment balance sheet, wow, great, but they forgot to make the entry. Yeah, they missed the debit. Okay, and on another option, they added the accounts payable. Yeah, in balance sheet, the liability increases, you are adding. So that's the thing. So in the balance sheet item, so it's not the answer because it's a balance sheet item. Sorry, I done like one second. Okay, this is these two are not the answer. So the option A and option C is not the answer. Either B or D, 50-50. Okay, let me go to the scenarios and explain the situations, everything. So the most important, the keywords. What are those questions? Find out the keyword instantaneously. This partially corrected, most important. And they missed the entry in the income statement. And we need to find what's happening in the income statement. The impact is like one of the thing is like partially corrected. The another one is recording the purchase. They missed the recording the purchase, but they made the partial correction. And income statement, partial correction. They missed the recording of purchase, and the impact is on the income statement. Okay. Sorry. Okay. Option A. But I took some elimination technique and I came up with something. So if you look into everything, like you can see, I have created a scenario and the entry actions and the impact on the income statement and impact on the balance sheet and what will be the outcome on the net income. So this is the same thing which I used for 4 options. So first, if the accountant has reduced the cash of $10,000, that's option A. So if he reduce the entry, if found out that thing like he has a more cash balance, maybe he's a person who is dealing with the cash and found out something like there is a deficit in the books of accounts and in my bank or petty cash, whatever the thing. So they found out that they made an adjustment, but it don't have any impact on the income statement. So that's the reason, no impact. So if what will be the impact on the balance sheet? Cash will be decreased by $10,000. Okay, will it have any direct impact? There is no direct effect on the income statement due to this entry because it's a balance sheet item. Why I'm explaining everything line by line? Because in exam, if they have asked something in different way also, you should be in the way that you can answer the question. Okay. I hope you understand this explanation. So next thing, like option B, put it on hold. Like go for the C, same, almost A and C are same. So the accountant has only increased the accounts payable. So they made the entry, maybe accounts payable credit $10,000, there won't be any impact on the income statement. Then what will be the impact on the balance sheet? Damn sure. The liability will be increased by $10,000. Okay, what will be the impact on the net income? There won't be any direct effect on the net income. It's a balance sheet item. Why it should have the impact on the income statement? That's the thing. Why am I explaining? Just imagine if a scenario, they may ask you same question, they may ask what will be the impact on the balance sheet. Or they may say due to this partial correction, there is an impact on the balance sheet. The liability is increased by $10,000. For option C, you can go with that question. Even for option A, you can go what will be the impact if the current asset is decreased by $10,000. Obviously, like there is an asset also. We'll come to it. Okay, like they may ask what will happen to the cash, something. They may have some new other questions also. So A and C. It's not the answer. I gave the explanation also. And why I'm explaining, they might ask you different questions. Let's go for this option number B. The scenario is like simple. The accountant has added the missing purchase worth of $10,000 to the cost of goods sold, most important purchase. So practically they debited $10,000. So the expenses increased by $10,000 in the cost of goods sold. So there won't be any impact on the balance sheet. Why it have impact on the balance sheet? Because you made an adjustment in the income statement. So it won't have any impact. But the net income will be reduced. How come, bro? I have done the workings, but just go with the flow. I will explain the workings. So this will happen. Practically, they adjusted the cost of goods sold, debited by $10,000. So practically, the expenses increased. When the expenses increased, the net income will be reduced. That's the answer is B. But you may think, bro, what about the option D? Yeah, I will go to the D. There is two scenarios. I will say why not D? But I will say why D, not B. Okay, there is two scenarios. Like the scenario one. They made the adjustment in the inventory. So they made the inventory credit. So the closing stock is decreased by $10,000. But there is an increase in the cost of goods sold. So there is an impact in the balance sheet because it's a closing stock item. It will be in income statement and the balance sheet. So that's the reason. When you think about the outcome, it will have an impact on the net income. Obviously, if you think about option B, where there will be the COGS will be increased. Same as option D. Bro, what are you saying? Both B and D seems to be the answer. No, that's not a thing. Sometimes you may confuse that B and D are same. Why not D? Why not B? That's the thing. But you need to read the question and more importantly, the options. So the second scenario will be like this. The same thing, like they have made an adjustment in the inventory. The inventory is made, they made an adjustment in the inventory, but there is no impact on the income statement. There is another scenario, what I'm saying. So the direct impact will be only on the balance sheet. So no direct effect on the net income. What are you saying? I will come to it because if you read the options, B specifically said they made an adjustment on the cost of goods sold. The entry is made the adjustment on the cost of goods sold. But if you look the D, it's plain. They never said they made adjustment in the balance sheet or income statement. Either or, they never mentioned anything. It's general. So you can assume anything. They only made the adjustment in the balance sheet. They forgot to make the adjustment in the income statement. They said partially they rectified. So that's the reason. The B is more precise because it's saying they made the adjustment in the purchase, especially to the cost of goods sold. Only the purchase. That's the reason. But if you look into the D, they said they have reduced the inventory. They never said anything about that they have done any adjustment to the closing stock. You can't find it. But then they haven't said they have made in the reduced the inventory by $10,000 in income statement. They never said anything in the income statement, or they never mentioned the cost of goods sold. So you need to think. So the B is the more precise option because it have clarity. Obviously, you need clarity, man. Like, yeah, you can go say you can D, but what I'm saying, the B has more clarity. Sometimes the questions and options might be like this, so they may mislead you. It's up to you to think open-minded. Obviously, like you can say like D is correct. Yeah, go. It's up to you, but it's not clear. While comparing to B, the D is not clear. Practically, it's like partially correct. I can take it like they made only the adjustment in the balance sheet. They may have done only the adjustment in the income statement also. Yeah, either or. But the option B says they made the adjustment in the cost of goods sold. So that's the reason the answer is B. Let me explain the scenario with an example also. I hope you understand this up to now. Okay, let me go to the explanation. Option D. Okay, this is the actual thing. What I've done is like I had taken hypothetical numbers like this is the actual. What if you haven't missed anything? They made the actual entry like purchase account debit either to cash or accounts payable credit. So in that situation, in that scenario, my purchase would be like 1,80,000 and the closing stock will be like 25,000. So my net income will be like 25,000. So they made everything perfect if it's actually done, but it's not happened. So what they have done is this thing. They completely omitted the entry before finding the entry. This is how it looked like. Bro, what are you saying? $25,000. Yeah, but in the actual also it's $25,000. What are you saying? Because the purchase is reduced by $10,000. And the same, the closing stock also don't have the $10,000. Think about it. If you haven't recorded the purchase $10,000 in your books of accounts, for example, you have purchased some units like 100 units of purchase you purchased and you sold 80, you will have closing stock 20 based on your books of accounts. But if you count with the inventory only, you know, like you have something, you missed out something. Unless otherwise you make the physical count, you won't find it. Okay, it's a missing, they missed the entry. So practically speaking, it's have impact on the purchase and the closing stock. Okay, so in both cases, the net income is $25,000. Actual and the complete. Why? It's a complete omission. Practically, the debit and credit get cancelled. Sometimes it have impact like there is no impact on the income statement, but there will be impact on the balance sheet. There will be like understatement of the assets, especially the current assets, specifically the closing stock. I mean the inventory. Okay, let's jump into the thing like partially correction. They done the correction. What they have done as per the option B, they made an adjustment to the purchase, the cost of goods sold. What is cost of goods sold? I hope you know about it. Opening stock plus purchases minus closing stock. That's what the COGS formula. What I done is they said they added $10,000 to the purchase. So I added $1,70,000 plus 10,000, it became $1,80,000. So the net income is $15,000. Have made any adjustment to the closing stock? They said they made the adjustment only to the purchase. Look precisely, they made only to the purchase, not to the closing stock. That's the reason they added to the closing stock. I mean, cost of goods sold. Added. They said added. The most important, added to the cost of goods sold. That's the reason. So right now I have the net income of $15,000 after making the partial adjustments. So actual net income is like $25,000. The adjusted net income is like $15,000. So the option B is the answer. If the accountant has only added missing purchase worth of, he just added the $10,000 to the purchase, not to the closing stock. Only to the 10,000 to the cost of goods sold. That's the keyword. Okay, most important, they added to the cost of goods sold. So let me show the Excel. I think it's visible. Yeah, it's visible. Okay, in this situation, if you look the actuals, what I've done is the actual, this is what happened if they haven't missed the entry, but they mess it out. So this is how the entry will look like. The $10,000 not in the purchase and the same $10,000 not in the closing stock. You can see it. Let me show it in the diagram. 1,80,000. It's but if you add 10,000, if you minus 10,000, I mean, practically it will become like $25,000. But what I just said, like they only said they added to the purchase as per the option B. So that's what I done. What I done, 1,70,000 plus 10,000. I only added to the purchase. Don't ask me about, bro, they have AI system. If you make an adjustment to the purchase, it will already have an impact on closing stock. Yeah, obviously it may happen, but hypothetically we are thinking like purchase. So if you go for those stuffs, AI as accounting information systems, like ERP systems, obviously they make the entries accordingly, but they said partially correct. Okay, they haven't done the complete thing. If they have done the complete, the blue one will be the answer. This will be the answer. Obviously, there won't be any changes, but they are assessing what will happen if they had made only the adjustment to the purchase. So in this situation, the 1,80,000, which is nothing but the 1,70,000 plus 1,80,000, 1,70,000 plus 10,000. That's what. So my net income is like $15,000. And what's the actual? The actual is 25,000. Obviously, the closing stock is understated. So it has an impact on the net income. So it's reduced by $10,000. If you need to make this entry correct, maybe like next question, what will happen if I add 10,000 to the closing stock? If I add 10,000, it will become like $25,000. And this will also become $25,000. Okay. So, but the question is only they made the partial correction. Most important, the keywords. I don't know, like I took a lot of time, but I hope you understand everything. If you still have any questions, like, bro, I'm kind of stuck with these type of questions or that type of questions or something, you can post it, or you can post it, man. That's it. Or you can refer the page or link something. I will try to make that question possible. You make you to understand those things. But this is like, I think it's lengthy video, but I hope you understand everything. Like I'll try to come up with something like fast and a speed way to solve the questions. But if I do line by line, you can understand everything. Thank you. Let me complete it with this thing. Okay, this is the question which I done. That's it. Okay.